Welcome back to Blockchain Basics. In today's video, we're going to discuss the bullish scenario for the cryptocurrency market and how I would invest $2,000 in 2022 if I was a new investor looking to enter the most volatile asset class in the world, that is cryptocurrency. Of course, as always, I am not a financial advisor and this is not investment advice, so always do your own research before investing. Anyway, let's get started. In my previous video, I talked about two potential areas of support for Bitcoin to find a bottom and begin a retracement that would move prices back upwards. The first was around $40,000, which we had already hit at the time. And I said that if we retraced from this point, that would actually be a bearish indicator and that I would expect the whole market to crash back down afterwards. Whereas if we went lower towards $30,000 and found support down here, that we would have a reasonable possibility of continuing the bull market. So let's jump over to the chart and see how things have played out over the last couple weeks. So in front of us we have the Bitcoin price chart over the last 12 months. This is the high at 64,000 last April. This is the high at 69,000 that happened in November. Since November, we've been in a significant downtrend, somewhat similar to the downtrend we had last summer. You can see right now we're around $41,000, which is a similar area to where we were when I posted my last video on January 16th. However, a lot has happened in that time. You can see that we did crash down further to around 32,900. And since then, we've actually seen the most upward price action that we've had during this entire period. And a lot of people on YouTube and Twitter are starting to get bullish again, hoping that prices will continue to rise. As you can see on the screen here, I don't necessarily think that is what's going to happen again. We've talked about this 7-wave crashing pattern before and how it is a very good predictor of when the bottom is going to come in. So let's take a look at this. The classic pattern is a 1, 2, 3, 4, 5. Where in wave 5, there's another 5-wave pattern. What usually happens after this 5th wave is finished is that wave 6 comes in, which takes you up to around the height of wave 4 here. That would put it in this orange box. You can see we just barely hit this orange box here at 41,400. In this sort of structure, you would expect wave 6 to come back up here and then for it to go lower one last time and take out this low here, which is at $32,900. Once again, I kind of have a contrary view to the rest of the market. And most people in the market are pretty excited today because yesterday you can see we had a 12% rise in the Bitcoin price, which is really optimistic. However, you can see here that I think we're going to head lower. Now, this I think may be the best buying opportunity you get in 2022. Of course, this is depending on the continuation of the bull market, and there's a lot of factors that could lead to the end of the bull market. At any point, the government could come out and put very strict regulations on cryptocurrencies or exchanges, increase the tax burden. The Federal Reserve could raise interest rates to combat inflation, which could crash the equity markets, and crypto is intrinsically correlated with the equity markets. So even buying down here, there's still quite a bit of risk. However, if this does play out, I would say that anywhere down here is a very good range to be buying cryptocurrencies. And I did buy a little bit back here, and if we come back down to this range, I would probably buy a little bit more, which is why I'm making this video. I know many of you that are watching this video are probably rather intimidated by the idea of investing in crypto. You've seen that you can lose almost all of your money. You've seen how high the prices have gone. If you look just a year or 2 years ago, prices were much lower, and it can be extremely daunting to pick a time to buy in, let alone to pick what to buy into. Do you go with Bitcoin? Do you go with Ethereum? Do you go with other coins that are cheaper? How do you know what's going to be around in the future? So that's going to be the main purpose of this video. Anyway, let's get back to how to spend $2,000 if you wanted to invest in crypto for the first time. And I picked $2,000 specifically because one of my friends within the last couple of weeks texted me asking, hey, if you had $2,000 sitting around, what would you put it into? And so that got me thinking about how I would invest $2,000 if I wasn't already invested in the cryptocurrency market. And so that's what I'm going to be sharing with you now. So the first thing is, why would you want to buy cryptocurrency right now if it's so much more expensive than it was just a couple years ago? And with me coming on here telling you there's certain signs of danger in the cryptocurrency market. Bitcoin might be at its peak. Prices for the last couple months have just been going down and down, but Bitcoin's lowest prices tell the story. So here you have the Bitcoin price chart going back to 2012 when it was worth not even $5. You can see, with one exception, the lowest price always trends up. Now, the lowest price in 2021 was $28,700. So if that was going to hold true again, that would mean that we won't go any lower than $28,700 this year or ever again. And really, the reason you would buy into cryptocurrency right now is because you're aware that the risk of not investing may actually be higher than the risk of investing. We're always investing our money, whether it be in the stock market or whether it be in US dollars. We're always choosing to do something with the money we have sitting around. If inflation continues to eat away 6% over the next several years of your money, then that would be a poor investment. You may want to invest in the stock market with the hopes that you'll get that average 7% annualized return over many, many years. However, there have been decades in the stock market where you could invest money and not see a significant profit for 10 or 15 years. And as you can see, there are many times where if you hadn't bought into Bitcoin, you never got that chance again. You never revisited those lows. So there is risk to investing in Bitcoin and cryptocurrency, and there's risk in not investing in Bitcoin and cryptocurrency. Yes, you may lose 50, 60, 80% of your money at any given time, but the first time that you own a coin and it goes up 1,000%, that makes up for any amount of losses that you've taken. So I want to really briefly tell you my experience with cryptocurrency. I started buying in April of 2020. I bought some Bitcoin and Ethereum and a few other coins, but it was mainly these two. And so this is the Bitcoin price chart. This is the Ethereum price chart. As you can see, over the next 6 to 12 months, the prices rose dramatically, and they approached the 4.236 Fibonacci extensions, which were my price targets. So as it got up into this range and then again up into this range, I started to sell my Bitcoin and my Ethereum with the understanding that there wasn't much higher to go, and I wasn't willing to risk all that money I just made for another 25% gain. However, I didn't want to just keep all my money in cash and exit the market completely, because I knew that historically, at the end of the Bitcoin market cycle, the money from Bitcoin flows into the other coins, and that there was still a lot of money to potentially be made. So I started taking that money and buying these other coins, these alternative cryptocurrencies or altcoins. And this was the idea going back to 2017. It also happened in 2013. Here's Bitcoin in the green and red candle pattern. And then here are all of the altcoins added together in this blue line. This is the altcoin market cap. And you can see that while Bitcoin outperformed the rest of the cryptocurrency market through most of the bull run, after Bitcoin topped and then crashed and then started to retrace, that was when the altcoins had their most significant moves up. So I bought these coins, and over the next couple months, they all outperformed Bitcoin. But one of them, as you can see here, Ethereum Classic, went up and hit its 4.236 extension, going up 2,400%. From the price was $5 back here to a high of $170. And that is exactly why you get into the cryptocurrency market. Because once you have an investment go up 2,400%, nothing else will ever look like a good investment again. So that coin was Ethereum Classic, and I decided to take some of that money and I bought the dip. I bought this dip. Here you see Chainlink and Polkadot. All four of these coins here were actually already outperforming Bitcoin when I was buying the original altcoins. So I stayed away from them, trying to buy the ones that were cheaper instead. However, after the excitement died out and all of these coins crashed down by 60 or 70%, I thought it was a good opportunity to get some exposure to them. And interestingly, as of just a few days ago when I was putting together this PowerPoint, they were back at these same prices again. So now this is my current portfolio. Still, about half of the crypto I own is in Bitcoin and Ethereum that I never sold, and I probably won't sell any of that for many, many years. The original altcoins I bought, I still own, although I sold some Ethereum Classic, and I am hoping to sell these under the assumption that there will be another euphoric phase of the market where all of the coins go up together very, very quickly. And then a little bit of my portfolio, about 15%, is in these coins that I think are good buys if you can buy them at a discount, but I wouldn't want to buy them when they're up thousands of percent. But let's say I didn't own any of those coins and I was just getting started and I had $2,000 to invest. What would I do with it? I would split the money, putting half of it into Bitcoin and Ethereum as long-term investments that I probably won't touch for 10 years or maybe even longer. I'd have very high price targets to sell these, and I would accept that along the way I'd make a lot of money and lose a lot of money, but I just wouldn't sell. And if Bitcoin does retest the $33,000 range, that could mean you'd get about 0.015 Bitcoin, or 1.5% of a Bitcoin. And with the other $500, if you can buy Ethereum around $2,500, that would give you a fifth of an Ether. So what would I do with the other $1,000? This is where it gets fun. This is our outperforming basket, and this is our underperforming basket. Now, in theory, at the end of each market cycle, all of the coins go up together. If that is the case, then these coins here will make you the most money because they are at the highest discount. They're still well below their 2017 highs. It would be like buying Bitcoin 2 years ago. However, it's possible that these coins aren't really going to do anything and that it's these new popular coins that are going to steal the show once again. And in that case, you want to have a little bit of those as well. So I would take $500, probably split it $100 into each of these 5 coins. Here's a few others if you don't like these 5. And I'd split this $500, $100 into each of these coins. I also own some of these. XRP I talk about a lot. However, I'm not recommending you go out and buy these coins because they're not available on Coinbase, which I think is the easiest exchange for you to use if you're just getting started. So again, when would I buy these? I would buy these not while Bitcoin's at 41,000. I would wait for that opportunity when Bitcoin comes back down to 34, 33,000, even 30,000. That's when I would be buying both the Bitcoin and the Ethereum and the altcoins, because when Bitcoin goes down, the whole market goes down together. But then how do you sell? Well, for my long-term positions, I'm assuming that this is going to happen over 10 years. Could be shorter, could be longer. But I would sell when Bitcoin hits somewhere around $500,000. You may think that Bitcoin's never going to hit $500,000, but remember 10 years ago, Bitcoin was $4. 5 years ago, Bitcoin was $700. So you sell your $500 investment, 10 years from now, you got $7,500. And just to show you guys, we really are probably only one market cycle away from $500,000. Same thing with Ethereum. $20,000 or hold it for longer. Save them for your kids. Anyway, that's what I would do with the first $1,000. Long-term investment, half into Bitcoin, half into Ethereum. Then the next $500 goes into these leading altcoins: Cardano, Chainlink, Polkadot, Uniswap, and Stellar. So let's take a look at Cardano. I recently bought a little bit of Cardano at $1 per coin. If Bitcoin revisits its lows, I would expect that you could probably buy Cardano again for $1 a coin. So if you invest $100 of your $500 to buy 100 ADA Cardano tokens, and then you sell them at $10, that would give you $1,000, or 10x your original investment. If that amount sounds unrealistic to you, you probably haven't been in the cryptocurrency market long enough. Just from 2020, Cardano went from 1 cent up to $3. That's an 18,000% move. if it's going to go up again this market cycle, the most realistic price point would be at a 4.236 extension from this most recent correction. And that would be another 1,000% move up to $10. You can do this with all of these coins, and you'll find that the 4.236 extension will give you a 10 to 15x your original investment. So if you invest $100 into each of these coins, you know that you have 5 of the most popular, exciting altcoins in the market with a chance to go up 10 to 15x this market cycle. And if it doesn't, you just hold on to them for the next market cycle and ideally accumulate more at even better prices. The idea here is that your $2,000 investment is really just dipping your toes into the market. If $2,000 is a lot of money for you, then you should start with a smaller amount of money. But next we have to talk about what I think are the most exciting coins in the market. These are the original altcoins that I bought, minus Ethereum Classic and Stellar Lumens, because they already went on significant bull runs, and minus XRP because you currently cannot buy that on Coinbase, although it's personally a coin that I'm very bullish on. So we're left with Zcash, Bitcoin Cash, Litecoin, Dash, and EOS. To give you a very brief history, Zcash and Dash are privacy coins. Bitcoin Cash and Litecoin are meant to be faster, cheaper versions of Bitcoin that are better for conducting daily transactions. And EOS is meant to be an Ethereum style token that you can build other platforms on, similar to Cardano. So let's take a look at Zcash. I recently bought some Zcash around $80 per token. Again, you're going to wait for some fear to come back into the market. The prices will go back lower. You'll be able to pick this up once and only once, probably for $80. You pick these up at low prices. You're able to get 1.2 Zcash for $100. You sell it up at the 4.236 extension, which is at $1,300. That nets you $1,500. You notice this is not out of the ordinary. Just this market cycle, it went up 1,800% before falling back down. Last market cycle, it made it up to $760. We're only looking for it to get 63% higher than it did back in 2017, when Bitcoin was half the price that it is right now. You do the same measurement for all of the other coins, and you get anywhere from $1,400 to $2,500 out of your $100 investment. And this is actually the more conservative price target for these coins, because as you can see, we measured the crash from this summer at $370 down to $80. If any of these coins went on a major bull run, the way that Bitcoin has, the way that Ethereum has, the way that Ethereum Classic and Cardano and many of the other coins have, you would measure the extension from the peak of the last market cycle all the way down to the bottom. And when you do that, you see that $1,300 is not the target, but that $3,300 is. And when you measure all of these coins like this, the price targets you get for most of them are actually even higher. That would be like turning $100 into $4,000. Not saying that's going to happen or that it's going to happen anytime soon, but this is the sort of stuff that is possible, and I can attest to the fact that it really does happen. It really does happen. So to wrap things up, this is what your $2,000 could get you. 0.015 Bitcoin, 0.2 Ethereum, 100 Cardano, 7 Chainlink, 6 Polkadot, 10 Uniswap, 550 Stellar Lumens, 1.2 Zcash, 0.4 Bitcoin Cash, 1 Litecoin, 1.2 Dash, and 50 EOS. If every single one of those went and hit the price target that we were talking about, you'd get $27,400 out of your $2,000 investment. Just to compare that, you invest $2,000 into the S&P 500 and gain 7% per year over 10 years, compounded, gets you $3,900. You're taking on a lot more risk, but the reward is much higher. I hope you enjoyed this video. Obviously, there's a lot that I couldn't cover because I wanted to keep it brief, and I wanted to get a video out soon because I am expecting prices to go lower again And I really do believe that if there is a good buying opportunity in 2022, that this will be it. Of course, we never know exactly what will happen, and I highly doubt that all of those coins will go on to hit all of those price targets. But I'm still invested in the cryptocurrency market, and I wanted you guys to know what I'm invested in so that you can make your own decisions and not miss out on the next exciting run-up. If you like this video, please give it a thumbs up and consider subscribing to the channel. Until next time, this is Blockchain Basics. Thanks for watching.